The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What's happening, Octane Nation? We're going to take a look at an ESG, a green play that a lot of people don't realize is green, and something we can take advantage of right now. We've also got some America dependency thing and nationwide and macro-wide dependency issues going on. We're going to dive on into URG, North America's premier uranium mining company. Pretty interesting here. They're a dynamic junior mining company operating at the Lost Creek Recovery Uranium Facility in south central Wyoming in America. The Lost Creek Processing Facility has a 2 million pounds per year physical design capacity. The Shirley Basin, our newest project, is one of the Pathfinder Mines assets we acquired in 2013. Baseline studies necessarily for permitting and licensing of the project are complete. They're moving forward. The WEQ application for the permit to mine has been submitted and work on other permits are underway. URG engages in uranium mining and recovery operations. So they're already mining this stuff. It's already good to go, but they've got more properties and more acres available. With activities including acquisition, exploration, development, operation of uranium mineral properties, so they can mess with it and make it whatever else they need to be. Shares of URG trade on the NYSE. The ticker is URG. URG on the NYSE in Toronto. Toronto boys out there, URE. In addition, URG's project pipeline is supported by the extensive valuable exploration database and intensive analysis programs providing for great exploration development potential. So what are we getting at again is they have a long ways to run. This is why I like mining companies that own multiple assets, because if the price keeps going up and there's still more of a need, which there definitely is right now, they can just keep riding. It's like pretend like it's like a gold mine, but for energy. So they're pretty cool. At a glance, that Lost Creek we're talking about, it's got 7 years of consistent production. So it's been running. It's not something that's like a pipe dream. Like eventually we want to start mining at one of our locations. No, they've been doing it for 7 years at one, producing a lot. Lowest cost producer outside of Kazakhstan. So we got the worldwide thing. The only people that can make uranium cheaper is Kazakhstan. Flexibility and value realized through higher priced term contracts. So they consistently have cash flow. The best profit margins in 2019 were 12.2 million in gross profits. Sustainable inventory spot market price up 20 to 30% in 2020 alone. So because of the weird geopolitical ties that we have and we don't have with other countries, we're losing the ability to actually even get this stuff from other places. All right, because if we're making them mad, they're like, we're going to cut off your uranium. And this is why I think it's important for every nation to have some in-house stuff that they own. Even nationalize. The U.S. should nationalize this thing and own it, if you ask me, because all other countries are going to just shut it off. Forging a path forward for the United States domestic uranium industry, the Nuclear Fuel Working Group reports the U.S. to take immediate and bold action, direct purchase of up to a bunch of it, federal budget items for established and national uranium reserves, $150 million annually is what they're saying, from 2021 to 2030. They're maintaining critical operational staff at the Lost Creek to support operations and prospective ramp up. So they're ready. They've got more staff. They're ready to rock and roll here. The nuclear fuel demand is growing. Did you know that 20% of electricity provided in the United States is from nuclear energy? That's what this is. 20% of people get their energy from this in the United States. 55% carbon-free electricity. So compared to like coal and stuff, this is it's not 100% perfect thing to rock with, but it's something they can light switch right now. You know, of course, we'd like to do 100% windmills or solar panels, but that's not something you can flick your fingers and they would happen. This is something we can here. Worldwide, 11% of electricity is from this. 1/3 carbon-free electricity. It's not bad compared to other things. 451 operable reactors, 54 under construction, more than half of which will come online in the next 2 years. That's huge. That's absolutely huge. I think that percent of coal miners or coal that's used for energy in the United States is around 25%. And if Biden does get in, he's talking about, I think, anti-coal stuff. So he could try shutting them down, and then this is the next first thing that he could grab. Here's the other thing. It's a depleting asset. The global supply is getting destructed. The Cameco McArthur River and Cigar Lake is closed. The Conver Den closure significance cannot be underestimated. So there's other locations that have closed because of what's been going on, right, since March and all that too. But get this. So in 2018 to 2019, there was 30 million pounds, let's say, 30 million pounds of global production. In 2020, there was 46 million pounds of global production annualized, but 35% of the global output has been suspended. The reductions are going all the way to 2022 is what they're slating and saying. Effectively, no North America uranium production at all other than these guys. The U.S. uranium market, 100% dependence on imports. Isn't that crazy? So 100% of our uranium that we use for energy for 20% of Americans is from imports. Recent annual import levels commonly 50 million pounds. 2019 U.S. mine production, that was 89% lower than 2018, lowest in the U.S. history. 2020 U.S. mine production anticipated to be negligible. Here's these other locations I was talking about. You see all the green here in this map? That's all the potential places they can start mining to. They're only in the middle here in that like purpley blue part. That's it. But they can tap into all these other ones. Additional resources can all be pipelined into the Lost Creek plant directly. Take a look at this. So resource growth, 250% demonstrates Lost Creek stability. Like I said, we want to see companies that have like a 45-degree angle on money and production, and these guys are one of those ones. I wouldn't say 45-degree, but 30-degree, we're good. Operational experience leverages the ramp up. They're showing here that this is 2021 here. They're saying by 2022, they're going to fully open up another big section, and see the blue here, we're going to add on that orange, and then by 2025, we're going to add on that gray on top of that. And that's just production amount that they have the capability of doing. They're saying it's all about the dilution. They're comparing themselves to 3 other companies and how they are diluting their shares. A lot of companies dilute their shares because they want cash. They can't figure out, or they just make excuses not to pull out cash by diluting shares, basically to move forward. These guys haven't. But sit down here, all these other people are totally diluting everything, right? So it's a big deal. We like lower shares because it's easier to make them go up, right? Shares outstanding, 160.5 million. So it's not super low. It's not like 10 million, 20 million. We've talked about some, but 160 in this area, right, for uranium is low. We talk about miners a lot, gold, silver. All the miner people usually have to dilute because it costs a lot of money to get these things up and running. So this is good. The uranium industry catalysts that are soon to come, this is a supply-demand thing. The destruction of the growth rates are both real, right? The current market forces, the things since March, related closures globally, higher spot price. So it's just like gold and silver. There's a spot price for uranium. That price is really high right now. The geopolitical risks, the U.S. facing conflicts with uncertainty in multiple regions around the globe. Heavy dependence upon low-cost imports from geostrategic rivals, Russia and Kazakhstan. Takeaway for URG, they're well-financed for 2020. They got a solid runway. They got $32.3 million in gross revenue with almost half that of profit, 12.2, like 43% gross profit. That's fantastic. Cash resources, they got cash. This is like the cleanest, best run, if you ask me, uranium play, and it's got the U.S. exposure. Why uranium? If you want to get into more information, you come to my sites down in the description and read more about it. I've got some good information. But the biggest deal is we use it. We need it for electricity, to power the lights and your air conditioner and your heater and all that. 20% of Americans rely on it. Can you imagine if we got totally light switched by Kazakhstan or Russia? What are those 20% of people going to do? Just turn it off like California? I don't think so. How about some catalysts that just happened? Check this out. So December 22nd, this just happened. Congress funds establishment of National Uranium Reserve and codifies projections of the recently extended Russian suspension agreement. So right now we have Russia in suspension. Right? This is a big deal. Please announce that the initial funding for the creation of the National Uranium Reserve has been approved by Congress as a part of the Consolidated Appointments Bill and is expected to be signed into law by the President. With passage of the Energy and Water Development and Related Agencies Approval Act of 2021, the U.S. Department of Energy, DOE, National Nuclear Security Administration, will be provided $75 million and is directed to coordinate with and support the Office of Nuclear Energy and the development of implementation of the National Uranium Reserve Program. Further, the DOE is directed to submit the committees and appointations of both House, Congress in 30 days of the plan, going to establish and operate uranium's reserve, including the purchase, conversion, and sale of it. So we can even sell it to other countries. A 10-year implementation plan of the activities for establishment and operations of uranium reserve, and a 10-year cost estimate. We're talking about nationalizing, how the U.S. is probably the worst place out there for nationalizing and kind of like holding anything they own for value. Right? We'll buy gold from the Swiss, we'll buy uranium from Kazakhstan, but we won't buy it from ourselves. Isn't that a little weird to anybody? Why are we always behind on that? But that's what we got going on here. Trying to slightly nationalize it. You know, I think that is a very smart move for something like energy. Why? Because we need it. How about the ticker? How about the chart? Let's take a look. What are we doing? What are we doing? We'll go back 5 years and see if we can't find anything. This thing goes on forever. So take a look at this. We're in Pennyland. We are definitely in Pennyland here. It was right in this channel. Boy, okay, so March we were at 25 cents. Since then, the all-time high since March has been 81, where we're basically sitting now. So it is, 2x, 3x getting there, but look at historically where it's been. I mean, this company's been around forever. Back in 2010, it was all the way up to $3.25. Why couldn't we get there now? Why not? I don't see why not. Looks to me like we got just a monster bull flag, and it looks like we broke it because you got to ride right on top of that, and we were sitting right above it. Y'all see that? The floor, it'd be nice to get this around 50 cents or something. I'd say is the optical floor, not the real floor. There's no real floor, but let's just call it the optical floor is around 50, 45 cents. So of course it would have been nice to get it back then, but we're only up to 80, 81 cents. I don't see how this won't keep going up, especially with like the decarbonization stuff that's going to be happening, especially in the United States, and the dependency on itself, nationalization of this mine from the government there. There was a react to that, but not much. Not much at all. It only went from like 65 to 85 cents, which is like, a decent round, like 20% up or something. But dude, we're here to multiply, right? Can it multiply? That's the question. Can it? Why not? I don't see why it wouldn't in the next year or something. Why wouldn't it? Got another line we can follow. How about right there? 89. Probably got a line there. On top of that, I'm honestly not seeing much. So I can just keep rallying. Maybe a line around $1.35. So if we can break the 89, it could probably head to 135 pretty easily. But I think once this word gets out, because no one's talking about this thing, once word gets out enough about this, it's got low enough float. Why won't it go up? Especially with that contract, when that gets fully put in, they're going to be buying more because we're going to need it. We definitely need it. You're all already in this play. Are you going to get in, or is this just not cool enough? It's missing there's nothing electronic vehicle to do with this, right? There's nothing to do with that. But at least it's got the ESG play, so it could get some hype from that. The Biden-ish slide to it, it could get some love from that too. What do y'all think? Are you going to jump into this? I think it'd be a decent place to park a little bit of money, get some uranium exposure. You never know what's going to happen with it. If you haven't subscribed, please do it. It definitely helps out our channel. We also have a Patreon where we've got a big group of folks that are just making a ton of money. So if you want, you can join that too. You're more than welcome. We'll see y'all out there. Take care.
Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwits.